Welcome back to the channel. Welcome back to another backtesting video. Sorry about the delay in coming. In sort of tuning in. Just had a couple of things just to do just before we begin. But let's begin and let's continue from where we were. Okay, so we're going to run through price for the PM session, but as we noted, the bearish order block here. And was looking at these lows as the potential draw on liquidity, and that's still to be the case. And why was we looking for those lows? Because we saw that price had traded to and through the balanced price range, so this was really supporting lower prices. We also saw how NQ had traded through a discount PD array here, so that indicated that we're likely going to trade at least to a discount market. And as you can see, there are no imbalances below the market, so potentially we're going to trade here. So this is why this was the case. Potential trade idea, didn't want to take for various different reasons, in the sense of where the trade was going to originate from, below the true week open, although the inception was above and we had this displacement down. So you know, there were reasons there that we could see that this was potentially going to trade lower. So far, the market hadn't traded to what I would have perceived to have been. So if we go here, looking for sort of approximately 2R, it hasn't traded today. It got to what, 1.5 ish, would say, yeah, 1.5. So interesting to see if the market continues lower now. If we were to mark up some new key levels, obviously we've got the high here. We've now appearing to have this low, although it's not formed yet, so we'd have to wait. So we're going to move price on. We'll use 5-minute intervals, and we should see the market now want to trade down to the old low H4. So there's a 15-minute fair value gap here, which will probably likely trade into. Obviously the market traded back into this bearish order block here, rejecting. We've got balanced price range in here and this SIBI, so we should really see lower prices from here and the market to continue lower. We are at 215, so it's perfect time for the market to hit that liquidity pool, and NQ likely to trade down to the previous. And there we go. So the reality is, it was a logical trade idea. Move that up to there. And you know, that would have been a viable potential trade. There were certain elements of it that I didn't like, as I said, below the true week open, that sort of stuff, but the trade did originate above the high. Also, I was looking at SMT. That is not, I want to say it's not in my model, but it is to some extent, because of how I look for high time frame cracking correlations. That technically is one, and then obviously we had the low time frame, which formed above. And again, if we're looking on the M5 time frame, if we're being completely honest with ourselves, the M5 traded down to and through, so obviously we wouldn't have had an entry on the M5, but we do have this large, we have obviously this, sorry, if we use the M15 now, we have the balanced price range in which price could be, stop loss could be put above, because the idea would be we shouldn't see price trade back up into here. Now we would have seen our stop loss come to here, so we would have been potentially okay at that swing high. We've been okay there. Price trade down, I would have taken out. So yeah, it's one of those, really. The inception of the move did occur at the high, and ultimately, you know, it could have been a trade that we could have taken. So we'll have to put that one down to a potential mistrade, although not necessarily. Um, I'm not looking at that as a sort of a clean cut model for the simple fact that NQ was already sort of so far down in the move that to me it if both had traded above the true week open and the inception of the move and so on, then fair enough. But for me, yes, could it be a mistrade? Possibly. No trade equally. So yeah, there we are. All right, let's clear up all the H1 and M15 levels and stuff, and let's clean it up and then move on to the next trading day. Get to that. I'm going to move that out as well. But what it clearly indicated was that the narrative in terms of where I think price is drawing to and why and stuff like that is very much accurate. I believe anyway. Don't always call it right, but a lot of the time I like to think that I do. So, so that was the low time frame there. Okay. And the reason why this SMT was high probability was because we purged this daily level on all assets. So that's something to note. So I'm just going to write this down. So PA observation. If we purge daily, a daily, a previous day's high / previous day's low, symmetrically, long word there, whilst also forming high time frame yeah, I think that's fine. So yeah, so if we purge high time, if we purge a previous day's high or low symmetrically whilst also forming SMT, that's high probability. Okay, and this should be coupled with a low time frame cracking correlation as well. Okay. Excuse me. All right, so let's crack on. Both markets have traded down into a discount. Have we got rid of all the H4? Yes, we have. So we're going to go out to the 4 hour. So this is, I'm going to check the daily. Yeah, okay. All right, so we have the beauty of backtesting is the ability to learn. And yes, my bias is still very much, still very much bullish. Looking at this area here for this day, so we're looking at that. Okay, so just going to add here high time frame SMT going back up to 4 days is high probability. Okay, so it can go across 2 cycles in essence. Okay, let's continue. So we are at what I'm going to do now is we're just going to fast forward to Wednesday. That should be Asia. Okay. There we go. Okay. Interesting. Right, hopefully this video won't be as long as the previous one. So daily, we've obviously get rid of that. It's not necessary. Drop down to the 4 hour. Get rid of this here. Get rid of that. That's actually a BPR. We'll mark that up whilst we're here, but what we will do is let's get our highlighter. So we've got no yeah, but it's not aligned, so not going to worry about that. We want this high and we want this high. Okay, and let's just put this here. Okay, so got a fair value gap here, but we don't have it on NQ, although we could use the wick. See if the wick there. But I'm going to just mark out this SIBI. Just because it was repriced. Nothing more. I'm not looking at it for anything in particular. And I just want to get rid of that for now. Right, so we've got I'm just going to make a note of the inception of the move. And where the Kraken correlation is. So the inception of the move is where the high time frame Kraken correlation forms in relation to the true week open. Trade engagement can form below or above the true week open. Okay. So that's an observation that we're gonna note. Okay. This is not looking. I've got an old. Okay, we can get rid of that. Right, let's go out to the daily and the weekly. Have a look at where potential liquidity pools are resting. Obviously, all members have traded through their previous weekly low, so that's supporting potential lower prices. Okay, now I'm just going to mark this very quickly, but I also want to, I also want to check the weekly. I think we are in, certainly making this more probable. Okay, so let's get this one marked in. And I've got some PD arrays which have okay. Alrighty, so back to the daily. So yeah, we had the daily BPR which got traded through on both. All members have traded through this key price level. Now there isn't anything excuse me, here. This imbalance here which is aligned. So I want to be looking at that one. And could be this one here on YM, but I'm more focused on aligned PD imbalances currently. Okay, this is okay. I don't have anything else really to note. At present. Apologies, thought I could hear something. I will be right back. I think it's the TV downstairs. Okay, so let's crack on into this. Let's get our analysis. So again, back with our daily outlook. I actually got my dates wrong. We're on the 6th. Yesterday was the 5th, not the 4th. So IOF. So relative to the daily time frame, this IOF has switched bearish, confirmed by the market, violating or disrespecting whatever you want to say, violating the BISI daily, trading to and through. Okay. Now it's important to note that with no daily high time frame Kraken correlation, this could be a near-term move lower to engineer liquidity above the marketplace. Okay. So relative to the H4 time frame, I have noted old highs being manipulated, whilst old lows being displaced through. Excuse me. Currently, bearish fair value gaps are being repriced and rebalanced. Or being left unfilled, with the market showing a willingness to reprice lower. Okay, so currently institutional order flow is bearish. So give me a second. Okay, so let's have a look at where we got to with ERL to IRL. So relative to the daily, I mean, it's interesting because ERL and RL is not clear on the daily. You know, let's be clear. It's not. Let's be clear. It's not clear. Bear with. Yeah. So as I said, it's not clear. So if we go out to the weekly, well, we can quite clearly see that we purged the external range liquidity pool, only taps it. Still think that we're likely to go back up there, and now we're trading into an internal range liquidity pool. So maybe it's important to note that it's relative to the weekly TF, the market purged the old high weekly external range liquidity and rejected with a weekly close below. Therefore, my immediate attention turns to internal range liquidity in the form of the BC weekly. And then I'm going to write important to note that ERL/IRL protocol, if you will, is determined by which time frame appears to present the clearest narrative. In this case, it is the weekly. Okay, so that gives us something to work with now. I'm just going to add that to some notes. Determine which monitor's going to turn off. So determine which time frame between weekly and daily presents the clearest narrative. Perfect. Okay. Right. Okay. So now I want to go to SPs. I've noted the clean and clear swing point above the current price, referencing the previous day's high. Sorry, let's just go back to the H4. Okay, we can actually take the narrative from yesterday. So TO currently price is below the prices below their respective true week opens, which would normally support high probability longs, but only coupled with high time frame cracking correlation at the lows. Okay. Cracking correlation. So this one was the one of contention. So I have noted the high time frame SMT at the highs with NQ brackets. This is the strongest divergence form. Which formed within the 4-day cycle guide. Okay. The market then displaced lower aggressively. Okay, so ultimately supporting lower prices. So now we're at the game plan stage. So this is now going to be rather interesting. Can get rid of that now. Don't need that. And we don't need that either. Yeah. Okay, so we have so it's London high. Which formed inside of that H4 BISI. Now, I did note and mention this on, so that candle here, obviously we've got this down close candle, but this candle here with its wick, you can, because it overlaps, that wick overlaps with just use graded. Let's see, so you could refer to the CE of this wick here because that wick overlaps with a candle that has an imbalance, so it's something to note. Oh, I'm on the 4 hour. Oh, let's just wait for this to sort itself out. Okay, and then obviously we've got this CBH1. Now, one of the things I do want to note, and I'm just going to. Oh, what happened here? Is keeping an eye on where we are in proximity. So we're trading into this imbalance, weekly imbalance. We're already in the weekly imbalance on ES, trading into it here. We don't have the same. So, you know, ultimately the next weekly, I mean, we've got a long way to go further, so I'm not necessarily looking past that. And also as well, I think something that you probably want to note is this range here, because technically wrong one. Here could be a draw if the market fails to find support at the BC. Okay, so I'm just going to make note of that. Drop back down to the 4 hour. Back to the hourly. Okay. Right, so we're looking at game plans here. Okay, well, the obvious one is the CBH1. We've obviously had 4 hour framework and confirmation to seek lower prices. We've also got the BPR up here and BPR and unfilled CB here. So we know that the H4 framework is bearish. So I'm looking at that CB. So GP1 is going to be at that CB. Let's go to our situational board. So with price being below the true week open, and also H4 framework supporting lower prices. If the market trades up into the CB H1 and forms a low time frame correlation, either a PDA SMT or low time frame SMT, this could support lower prices. Okay, so that's one. With currently where price is, it only really allows me for 2 models. So if I venture out to the 4 hour, and probably the 4 hour is not necessarily the, we're here, we can get rid of that. Yeah, I'm not really looking for much by way of, for I think where we are, it would be near term 4 hour liquidity if we're going to see higher prices. So it's likely going to trade to a daily level. So I'm not really supporting any from here with all 3 closing below their previous week's low as well and stuff like that. I'm not really supported any, well, what we could see is if the market is extremely bearish, this is not formed yet. Okay, so this PD array has not formed. I'm just marking it for reference. But if the market was to trade up into the CB, and that could as well present an opportunity. So I'm just going to mark that. And they would be my only two but you might find that there's a level of overlap, as you can see. Okay, so with price being so yeah, ultimately it's the same as the low time frame. So if the market trades up into the CBH4 and forms a high time frame cracking correlation, this could support the idea of lower prices. Now it's unlikely we would get a low time frame cracking correlation because there's no high in here in that CB. Okay, so just if we were looking at the 4 hour, there's no high in here, so it's rather unlikely. Give me a second. Let's just do. Okay, sorry, I'm back. All right, so we've got the two models. Let's just drop down to the hourly. Sorry, in fact, let's drop down to. There isn't any other liquidity pool that I'm sort of looking at there. Just going to get the calendar. I think it's FOMC minutes. So it's not, for anyone out there wondering, it's not the big FOMC. Oh, we're going to have the same issue. Oh, God. I don't understand why this thing does that. It's so annoying. Okay. Right, so I'm going to stick on the 15-minute. Haven't really, like I said, I'm looking at, in fact, no, I'm going to stick to the hourly. Sorry, tell a lie. I'm going to stick to the 15 just because I can see, for instance, equities open clearly. So if we trade, this is not, I probably shouldn't have, I'm going to take this one off because until the that 6 o'clock candle closes, until 10 o'clock, which is 3 hours away, it's not really an imbalance as of yet. This candle is still in operation, so gonna remove that. Let's play price on. We'll use 5 minutes till we get to 8:30, and then we'll see where we are from there. So this is so not ideal. Let's go to the hourly. No, market is certainly bearish. That candle there, there's no imbalance, no overlapping imbalance. So just go out to the 4 hours, see if there's anything to note. I don't think so. Go to the daily. No, I think we're continuing lower. Where are we drawing towards in terms of liquidity would be good to know. Okay, so potentially the BISI here as well. Okay. Not really seeing anything. Let's continue. Okay, so we're approaching equities open, the 9 o'clock candle closed. So now we have that. Market's just not looking favourable. And when the market sort of does this, this is when you start kicking yourself about previous trades that you missed, didn't take, but you had the opportunity to. Maybe just being a little bit more aggressive per se be an option. Okay, so market's traded up into the newly created SIBI. Now, I've said this before. These two levels, for me, they're not that sort of strong. Once you trade through once the market appears to be traded through a SIBI, it's not as strong in my opinion. And with there being no hourly liquidity pool here, the likelihood is if we trade through, we're trading through. So could we see, what I want to see in here is whether we get a M5 SMT in here. Oh, sorry. So let's monitor this SIBI, this H1 SIBI. Let's monitor it. But right now, as we can see, pretty symmetrical. So we're going to drop this to the 1 minute. See what happens. Got symmetrical lows as well. Now that's interesting. Let's just put that in like that. However, need to see M5 displacement. So there's no imbalances here or anything like that, so certainly want to see this candle. There's the order block there, but this is just a potential propulsion block. But I'm going to mark this up here. What is weird? Why have we all of never mind. Not going to ask any questions why we've all just randomly got this. So that would be that one there. Took out short-term high. Took out short-term highs. Okay. So, and then on the M15, I'm also monitoring. I'm just going to put a marker on this one. Just want to monitor that level there. Want to see M5 displacement yet, so there's, you know, we're not even at equities open, so well, that's just sort of a minute before. Wow, look at that. Look at that. Okay, so we can look at that as a potential market structure shift. Let's just take that out. No, leave that in for now. So I want to zoom out. Let's not get too. So rejected from CE, however, no SMT or anything has formed. Well, that being said, actually, that's not entirely true. So the question is, do we see a rejection? This would be the order block on. Alright, let's continue. Wow. In fact, let's step in. Okay, so we have an imbalance. We don't have an imbalance yet on. Oh, do you want to do that? There's a small imbalance in there. Now, in terms of the order block, though, mind you, M15, it's now looking like that. It's the M15. And we've got, yeah, so not at the hourly time frame yet. So do we have M5 imbalance? We do, right here. Okay, and then do we have one here as well? So we'll look at this candle's low, 593, this high. Yeah, there's a very, very small imbalance just in there. Okay, so now what I'd be looking at is on the M15, now that we've confirmed that order block. I mean, the M5 order block, we could still argue is the entire thing here. But I'm looking at the M15 and I want to see whether the market has any appetite to trade higher. And the answer to that question is no. So now, unfortunately, if the market moves to R, sorry about that, as I was saying, if the market moves to R on either NQ or ES, that invalidates any trade idea. Which again, it often prompts you to think like, oh man, the trade that I missed, that sort of thing. So if we look at this, was there any? No, because we're looking for M5 displacement. We got it there. So let's play on. As soon as ooh, not quite. What time are we? 9:56. There you go. So NQ is traded through. Look at the M5. So unfortunately, there's now no trade idea as far as I'm concerned. That move has played out. So bit of a shame. I wouldn't get in on YM. Besides, I don't trade YM anyway. So going to play this out. And so far, it's just been a bit unfortunate, right? Expect that old low liquidity pool to be taken. This has been a real frustrating. Yeah, still that imbalance. If we just go out to the, I think the hourly. Be highly surprised if this was a trade idea. But interestingly, this is a trade idea. But NQ has now traded into that low. Should go lower. Be surprised if it purged that. Let's see what happens. Get into FOMC. Okay, so it's purged all the way through. There's the volatility from there. So we're just having a look at what occurred in the PM session. Remember, once you move or your idea has formed, oops, you just move to the sidelines. Let's go out to the hourly. Yeah, probably seeing higher prices now. Yep. Where are we? Wow. Just look at that. Okay. I'm going to leave it there for this one. One of those days. It's one of those frustrating things. You look back on a missed trade that you had before and you think, I should have taken that one, and so on. And as the week starts moving away, I know with my model, the market's not going to present many opportunities during the week, maybe 2, 3, if I'm lucky 4, but usually 2 or 3. So when it occurs, I have to be on point to take them. And so far during this series, I haven't been as engaging on those models as I should be. And that's one of the things that I ultimately need to work on, and I think that in doing so is going to ultimately propel me. And this is why this series is here. But at the same time, this series is here, and it's important that I engage the market to see what the outcome of the things that I believe to be true in terms of my edge. So yes, unfortunately, not able to capitalize on anything today. It's starting to become a bit of a repetitive theme, which is a shame, but we're going to change that. We're going to try and hit the targets that we want to hit, and we're going to keep moving forward. So with that being said, hopefully you enjoyed this episode. Hopefully you took something away. I'm going to leave this one here, and I will be back a bit later on to record Thursday the 7th. So I'm going to leave it there, and I'll catch you guys in the next one.